First quarter 2022 for Carvana is what I am calling Carvana's terrible, horrible, no good, very bad quarter, because I think I'm funny. Welcome back to All Cars, y'all. I'm John, and this is not a financial channel, but it's very interesting what's going on with Carvana. Today I want to kind of break down the history of how we got to here, what's been going on, and what do I think about Carvana long term. So first off, you know Carvana. They are a used car retailer that they've got the car vending machines, and I really like them. I like what they're trying to do. I'll talk more about that at the end, but this quarter has been brutal for them, culminating in their first quarter results. They sold less cars, they made less money per car, they had a loss that was bigger than anything that had since, I think, 2018, and it culminated in them laying off about 2,500 employees, and they were accused of doing so via a Zoom call after sending out a 7:30 a.m. email regarding the Zoom call and freaking everybody out. Still, the whole thing has been handled very poorly. So let's roll back and look a little bit at Carvana and their history and how we got to here. So they actually started back in 2014, and they, like many startups, have a long-term plan for growth. And first quarter did have some good news because they hit a milestone of 1 million cars delivered. They've been narrowing their losses every single year, and honestly, things were kind of looking up. And then the first quarter of 2022 hit. Now, back in February, they announced that they were going to buy a auction house with physical locations of ADESA US for a transaction price of about $2.2 billion. Since the stock price has been decreasing most all of this year, there was already some waves out there that something wasn't quite right. And so in April, they did announce that they had a, quote, challenging first quarter, which we'll talk more about in just a minute. Later in April, some automakers began rethinking whether they were going to continue to use ADESA for their auction needs, since it was going to be tied up into Carvana. They had to sell about $1.6 billion in what's I've read is junk bonds, but I heard it was also a stock offering to finance their purchase of ADESA. And they finally do wrap it up, only to have in May, Illinois suspend Carvana's license for issues regarding titling and registration. That led to 2,500 job layoffs, a stock sell-off was triggered, employee backlash, and basically Carvana looked like the bad guy everywhere. Now, it's interesting to dig into their shareholder letter a little bit and see what's actually been going on. So let's look at the results first. They said they sold 14% more units retail, an increase in revenue of 56%, gross profit was down 12%, gross profit per unit was down by 823, with a net loss of $506 million. Now, there's something I'm going to draw your attention to here. They talked about Ernie's 1mm unit milestone gift to employees. I want to kind of wrap back to that. But what's interesting is because it's a financial statement, they're actually comparing Q1 versus Q1 of 2022. This is not reflecting, these up numbers are not reflecting what actually happened between the fourth quarter and the first quarter. They're comparing it to a year before. So let's look at what it actually looked like. So showing this graph right here, you can see that in the history since 2014, they have increased their sales, and fourth quarter 2021, they had 123,000, and it fell. So sure, it's up 12% relative to Q1 2021, but it was a rather dramatic drop since the end of 2021. And as you can see here, their stock price has been on a almost never-ending downward spiral ever since the beginning of the year. This is year to date that I'm showing you right here. In fact, I haven't done the math, but I think it's lost something like 85% of its value. Does that mean that maybe investors were a little irrationally exuberant at the beginning? Well, they were on the cusp of making a profit. Let's look at their financials real quick. So if you look here, down at the bottom, net income slash loss. They have narrowed their loss until the fiscal year 2021. They had a 2.2% margin. That trend said they were about to hit profitability. And that leads us to, why did they buy the auction house? Well, the auction house has, I believe, 56 locations around the nation. So they have the ability to source, get ready, and deliver product. And something like 94% of all households are within 200 miles of one of these ADESA sites. So that is going to be able to increase dramatically their production, their ability to source cars, and reduce the cost to the company of sourcing and getting these cars ready. So why do they have these struggles? Well, in their shareholder letter, they actually said that some of the factors impacted the entire vehicle industry. They specifically mentioned Omicron, used vehicle prices, interest rates, and some other factors. And that makes a little bit of sense to me. Certainly, people were restricted by buying cars, but that's not going to really affect 2022 as much as it did 2020 and 2021 when they had strong growth. Used vehicle prices, that should be a double-edged sword, shouldn't it? If you're paying more for the car to acquire it, you're probably selling it for more. However, you could see that impacted their profit per vehicle. And interest rates, I get that. That's two different things for them. The first is restricting the ability of people to buy these more expensive cars because interest rates are going up, but also the financing of the company if what they're paying is going up as well. It's a lot of different things that would be constricting them. But they do say here as well that they believe it's a large, stable market of over 40 million annual sales. And all they want to do is get their little share of it. When you look at their production capacity, going back to that acquisition of ADESA, I don't know if that's how you pronounce it, by the way, but that's what I like. As you can see in 2021, they hit that 1 million units post ADESA, and in the future, they think they're going to be able to go up to 3.2 million. So their goal is no less than to get 8% of the entire used car market. Looking back at their financial goals real quick, they have this long-term target. I find this very interesting because look at advertising. Right now, they're spending 4.4%. So in the first quarter, they upped their advertising a little bit, but their goal is 1 to 1.5. So part of their path to profitability is the belief that they're going to be able to cut their advertising by about 75%, as well as some of their administrative costs and everything else, one of which is their SG&A, which they want to cut by, well, more than half, almost another 60, 70% right there. These are very ambitious. Maybe not out of line over the next 5 years, 10 years, but very ambitious. And they want to get to a gross margin of 15 to 19%, which isn't outrageous because you can see in 2020, 2021, they were getting right about there. What does this all mean? Well, I think Carvana's super cool with their car vending machines, delivering it to your house. Millennials and Zoomers love to shop online, and they're much more comfortable buying something and having it just show up. Carvana's done a lot of really good things there, and to me, they're like CarMax, but modern. I'm one of those people. I'm not going to buy a car unless I actually drive it. I've driven too many cars where you ride in it and it's a little noisy, or your knee hits the center console, or the seat's uncomfortable, or whatever it happens to be. I have to drive it first. So Carvana does not appeal to me from that perspective, but I've spoken with several people who absolutely loved the process. The other side of it is Carvana is, again, like CarMax, you're not getting a deal. Their prices are fixed, and they tend to be at the high end almost every time I cross-shop them. If I find something at my local Honda, Toyota, Nissan, Ford, Chevy dealer, or any random used car dealer, and I go over to Carvana, Carvana probably has a nice example of it. But I tend to have to pay for it. That being said, I think having a 1.5 million unit or even up to a 3 million unit goal is entirely doable for them. I think there's a lot of short-term pressures that they're facing right now that are easily overcomable, but it does set them back probably another few quarters on their road to profitability. And it'd be interesting to see how other automakers react to Carvana controlling ADESA and whether it they find other avenues for their auction services. I'm going to finish with this. In my opinion of Carvana, maybe it's not for me unless I knew exactly what I wanted. I'd already driven it, had the exact thing I wanted. I like their buy it there, finance it there, deliver it to my house, and then I just get to start driving it. I really find that pretty appealing. And I also like the company. Sure, I'm a little dismayed at their firing people through Zoom, but I'm not applying for a job. But remember I mentioned earlier the unit Milestone gift to employees? In January 2022, the CEO of Carvana, his name is Ernie Garcia, has committed to giving current employees, quote, 23 shares of his personal stock once they reach their 2-year employment anniversary, equivalent of over $100 million in that day's stock price. And there was a 2018 100,000K milestone gift that he recognized team members who have contributed time, dedication, and effort to helping Carvana reach achievements. I like this. I like this a lot. Obviously, the CEO is doing very well for himself. And by gifting it to the employees, that's showing appreciation. It's coming out of his own pocket, as it were. And it has a negligible impact on the company itself. It's not costing the company anything. It's coming from the CEO. I really respect this. I want to see Carvana succeed. I admit I do. I like them a little bit better than CarMax, the system that they have set up. Except the fact of the matter is I'm going to go to a CarMax to drive it first. But I like what Carvana's trying to do, and I think they've got a big place for certainly younger people who are looking to buy a car. Let me know your thoughts below, guys.